Do you think getting into fintech is a very risky?
There's the risk of collections, the risk of customers' business, the inherent risk when you say, risk of customers' business not doing well.
How much do you miss Acharya?
Acharya is my home, as I said.
Okay.
I had a fantastic time working with the leadership at the Acharya. And the advanced AI systems that is available in the market and which QuID has implemented, the entire concept of lending has changed.
Do you also have insurance options for those taking money, or someone who's borrowing from you doesn't have to be? You can claim the insurance. Do you have something like that? A lot of the startups are only into quick delivery, quick commerce, quick fashion. Are we restricting our mindset to only chasing something that has been done and successful? So Acharya, we've always tried to push the boundaries of entrepreneurship because in an era of startups and new businesses and everyone nowadays starting something new, we would always want to push the boundaries of entrepreneurship. And today we have with us Mr. Vikram A G, the co-founder of QuiD, the B2B Supply Chain FinTech company, and also Sir was a big part of the Acharya family. Sir, I'd like to welcome you to our podcast.
Thank you, Akshay. Always happy to be part of anything that Acharya does. In fact, Acharya has been my home. As you rightly said, I'm a product of Acharya. Very proud to say that. A part of Acharya family.
Sir, FinTech in the last 5-6 years has changed the whole scenario of the Indian startup ecosystem. FinTech and EdTech, if I'm not wrong.
That's right.
Do you think, getting into FinTech is very risky? Does it come with a lot of tension? Which I know it is, but I want to know from your perspective.
Yeah. See, for any business that for that matter, it's risky.
Mm-hmm.
But as long as you are passionate about it, as long as you are enjoying what you do, you will cherish the moment.
Right.
To the point when you said, fintechs are risky. Yes, it is risky, but it depends on what is the problem that you are trying to solve,
Mm-hmm.
right? And whose problem are you solving. And the moment when you realize that you are working towards solving a problem of your customer, right? That gives you a different kick. Right?
Sure.
That is where I enjoy what I do. Right? I thoroughly enjoy because every day when we start our day, we touch thousands and thousands of MSMEs.
Mm-hmm.
We help them, we enable them. Right, and that is what gives us the proud moment and happiness.
Okay.
That's now according to me is about building a startup.
Got it. So you were telling about MSMEs, and I'm very happy that even the government is doing a lot for MSMEs, a lot of schemes coming in.
Yes.
But how does QuiD come in this equation? What is QuiD all about?
So, as you said, actually, QuiD is a B2B supply chain FinTech. Right? What we do is, let's say there is a distributor or a manufacturer or a D2C brands. Right? Basically, a supplier. So, he is supplying goods to somebody who is buying from him. Right? Another business which is buying from him. Now, this supplier also buys goods or products or raw materials from another supplier. Right? So, let's take an example. Let's say there is a HUL distributor. Now, he is buying goods from HUL. It has a PNG distributor. FMCG distributor. When he does this, he has to make payment to HUL in advance.
Correct.
Right? 7 days in advance typically. But the same distributor or the manufacturer, when he supplies to his retailers, dealers, whatever we call it, he will have to wait till the retailer or the dealer makes payment.
Correct.
In between, it so happens the working capital gets blocked for the dealer. Right? So there is no growth. So what he does is he borrows from the bank on his balance sheet. And then, basically, client in this example, HUL, and then keeps doing the business. But there's a limit to which the bank can fund it because his balance sheet has a limited capacity.
Correct.
What QuiD does is QuiD helps distributors unlock the working capital.
Okay.
Now, the way it works is now when this distributor or the manufacturer, when he supplies goods to a dealer or retailer, right, we do tech integration with the distributor. We get his invoice on our platform. The moment that happens, we onboard all his buyers onto our platform through our digital channel.
Right.
We deliver this invoice, his WhatsApp,
Okay.
and there is a mobile app. The moment it gets delivered on his WhatsApp, he can select the payment options. You get to see his invoice copy,
Okay.
digital, right? And then below the invoice copy, he has pay now option and pay later option.
Mm-hmm.
Now, when he selects pay later, right, we as an NBFC, QuID is also an NBFC, right? We as an NBFC disburse the funds to the distributor or the manufacturer day one, T+1, right? So the retailer or dealer here, he gets time based on the tenure that he signs. So in this case, what is happening is, for the distributor, earlier who was waiting for, let's say, 30-45 days to recover his money, right? Today with QuID, he is getting that money either same day evening or the next day maximum.
Okay.
Right? So his working capital gets unlocked immediately. For the retailer or the dealer, the benefit is he gets to pay based on the timelines that he decides. He gets time to plan his cash flows. That has been a core product. That has been our major strength in what we are doing. Right? Now for the distributor, if you see, now with QuID, instead of earlier when he used to borrow from bank, he's not borrowing from bank anymore. Because the working capital is off balance sheet. It is not on his balance sheet. That gives him the edge in terms of growing his business and scaling it up without depending on the banks.
Okay, good.
This is exactly what QuID does.
So, as far as I can understand, is you as an NBFC are playing with a certain amount of money that you have, and then you want to be profitable, and I hope you are profitable, and I really wish every startup is profitable. But what is that inherent risk in this whole process for you as a company?
Good question. See, the inherent risk is always the lending risk. Right? When we lend to others, there is a risk.
Correct.
Right? The risk of collections, the risk of customers' business, the inherent risk when you said, the risk of customers' business not doing well. Or there are cases where he may get into a lot of other things and he may not be able to run his business. That risk we always have. But having said that, if you look at the model, right, in our model in which we operate, we have an anchor that is a distributor, and he is supplying into his dealer or retailer. Now in this model, we have a long-standing relationship. Right? It is not that I am giving a personal loan or direct business loan to somebody. It is a closed loop ecosystem. QuID operates only in a closed loop ecosystem, where there is a distributor whom we call it as anchor, and he has a vintage with a dealer or retailer. And we check a lot of other data points. Right? There is a 3-year business vintage. What is the GST that, the kind of GST that is getting filed? How is this business doing overall? This bureau. See, all in all, we have a concept called QuID score. And in QuID score, we check close to 110 different parameters before we decide to give loan to a particular retailer or not.
Can you tell us at least 5 or 6 so that we...
Yeah. See, as I said, the vintage between the supplier and the buyer, right? How long is he working with this, borrower, with this borrower, right? That is one. The second is his bureau, right? The bureau, what is his score? What is his historical behavior? Is he paying a loan on time? Has he defaulted on any other loans in the previous 3 years, 6 years, right? That is getting checked. Now is GST data, right? GST, how is his GST finding? Is the business growing as per the GST? Right? We also check the KYC data, right? Who is this person? Where is he residing? Actually, because of the tech and the advanced device systems that is available in the market and which QuID has implemented beautifully, the entire concept of lending has changed. Today, lenders have more confidence when they lend because of the availability of data. And to our advantage, the idea is when we use this data, to analyze and decide whether we lend to a person or no. And if we decide to lend, how much can we lend? Data is something which is playing a major role today for lenders like us, or fintechs like us, to decide whom to lend and whom not to lend.
Since you deal with B2B, right, it's businesses to businesses, is it easier to lend? Because B2C is always a risk, because there is a high chance of defaulting. So, is the risk of defaulting lesser when you deal with a B2B point of view?
Technically, yes. The simple reason is if you look at the statistics, personal loan portfolio, and banks or lenders directly lend to a person, the average NPAs are very high.
What is an NPA?
NPA is non-performing assets. When the bank lends and the money doesn't come back, they call it NPA. There's a rate. Now that is the risk the banks take. Right? That is one product. But if you look at any banks which is also doing supply chain finance, or any lender which does supply chain finance, because it is a closed loop ecosystem, the NPA rates, the default rates are extremely low,
Okay.
right? Because it is always in the closed loop.
Correct.
So a business, let's say an MSME or an SME, simply will not stop business with a particular supplier and then vanish one fine day.
Okay.
It doesn't usually happen. There's a risk. I'm not saying that there's no risk at all. But if you compare these two products, the personal loan or the direct lending versus the product that we are doing, the default rates are extremely minimal. That I can say with confidence.
So, as a receiver or someone who's benefiting from the services you are giving, the client or the business doesn't have to keep anything as a collateral, right? But what is your collateral? Because there's one question that I've always had. How do fintechs operate? What is that big level of collateral that fintechs usually keep and then get monies from the bank? What is that?
See, there's no concept of collateral in this game.
Okay.
It's pure unsecured collateral.
Right.
There's no collateral.
But for you, is there no collateral that you have?
No, nobody has the concept of collateral in the product that we today do.
Okay.
Right? There are two types of loans: secured loans and unsecured loans.
Okay.
The secured loan is something which you are referring to, right? There is
Right.
a collateral, and then against that collateral they lend.
Correct.
But the unsecured loan, as such, there is no collateral. Right? So we lay on the data, we lay on the size of the business, we lay on a lot of data points. As I said, there are 110 parameters. The system automatically checks all these things before it takes a call. It's basically an algorithm, right?
Right.
It then decides whether we lend or don't lend.
So, do you also have insurance options for those taking money from you? Because you will have to also see you are safe. Because there is an insurance. Even if the someone who's borrowing from you doesn't have to pay, you can claim the insurance. Do you have something like that?
Yes, there is. It's a wonderful question that you're asking. For unsecured products, there are two types of insurance. Right? The first one is the death and disability insurance. This one, where if the borrower has an issue in terms of death or disability, that the insurance company will pay the It's a standard product which is in the market only. But there's another product called credit default insurance. Now this product covers the other aspects of risk. Let's say there's a borrower, he faces some challenge and he's not able to make the payment, right? And there's a process. So these two products, but that said, actually, these two products are standard products in the market.
Okay.
We have to work with the insurance companies to structure a product which suits our requirement. Because every fintech operates in a different zone, right? And they have a different product algorithm. So what fintechs does today is they work with the insurance companies to structure a product which fits their requirement. That's how it operates. But there are insurance possibilities.
So, it's not a compulsion, is it?
There's no mandate as such.
Okay.
You have to take a policy.
But if you mandate an insurance on someone borrowing money from you, fintechs are pretty safe then, because there is no risk that you have. You're just taking money here, giving it to them. If they don't give you back, you just have to claim the insurance.
Right.
If I'm right.
See that doesn't work like that.
Okay.
Because in that case, you are as a lender, you are passing your risk to the insurance company.
Correct.
And the insurance company will not agree to this.
Mm-hmm.
Right. The whole idea here is when you lend, you take certain percentage of risk.
Correct.
You are aware of it. You plan for it.
Mm-hmm.
You in the year beginning, you budget to it. You say this much money is something which I may, right? It happens. Right? Any external events can impact lending business.
Okay.
I'm not talking about QuID, but in general.
Mm-hmm.
So that you budget for it. You say this much money I may lose on the lend. But the idea is when you build a book, you accommodate all these factors and then still say this is my plan and exactly this much is the margin that I would like to make. It's a model, it's a financial model which you have to work on. And then decide what is based on your risk appetite. Each lender has a risk appetite. He would go up till his risk appetite.
Correct.
Depending on the product, depending on the if the product is within the regulatory framework, he decides how much risk I want to take in this business for this particular year. Based on that, they plan.
Okay. What about processing fees? Because is that also there?
Yes, we charge processing fee.
How much is the processing fees?
It depends, as I said. There's an anchor.
Okay.
We work with him. We ask him, what is the size of his.
On an average, you can
It depends. It can be as low as 0.2%. It can be as high as 0.5%. It depends. It varies item to item. We do not have a standard processing fee charged to all the anchors. Because see, there's a lot of tech cost which is involved. Like when I onboard an anchor or a borrower, because there's a lot of tech cost that we have to take. There's a legal cost too. To cover this, we have certain fee which we charge one time as person.
And what is the range of the rate of interest that you charge on the
Yes, see, I'll give you the range.
Yes.
It can be as low as 10-12%. And at times it can be as high as 15-16%.
Okay.
It again depends, because when we partner with Anchor and when we analyze the borrowers, we decide. There's a concept called risk-based pricing.
Okay.
We understand the risk levels. What are the probability that this borrower may not pay us back.
Got it.
So the pricing of the loan product is always done based on the riskiness of the customer.
Got it.
Higher the risk, higher the interest rates. That has been the industry standard. But yeah, this is the range at which we operate.
So do banks also offer loans without a collateral? Is that also there?
That is, yeah, it's there.
So that is there. Why would there be a necessity for a fintech to fill the gap that the banks have?
Good. So the reason why fintechs have emerged in India is that they focus on the space where banks cannot actually focus and scale.
Okay.
So for any business for that matter, it has its own DNA, right? They work, they strengthen that DNA as and when they grow.
Okay.
But when they do this, they may not be able to touch all the product gaps that are there in the market.
But if the system is so large and there are so many banks in the country, wouldn't it be pretty easy, because all of them are nationalized players, big banks? Even if there is a dearth of, you can't expand to everything. I think with the manpower that they have, can't they also get into all these devices?
They can. See, the banks in India have a different mandate. Right? If you see public sector banks, they have a clear mandate. Right? They have to focus on certain social aspects of it. They do good business, but still they have a mandate from government of India. If you look at private banks, they prefer doing corporate banking. They prefer doing, CASA-based accounts, like current account, savings account. Each bank as a business has its own core strength. They focus on that. But the moment when it comes to supply chain finance, right, for banks to get into this, right, they have to build a product which is fully customized to the market.
Okay, got it.
That they may not be able to suddenly do it. I'm not saying they cannot do it,
Right.
but they have stake somewhere else. They have invested heavily somewhere else, and they focus on where they have invested.
Okay.
So this is the gap which we found, that banks may not suddenly jump into this, because for them scale matters. Right?
Correct.
Each ticket size matters. They have a different regulatory framework. The banks have a higher, very rigid regulatory framework. But NBFCs are meant for certain things.
Okay.
So this is the market gap which we identified based on our research, and we said, okay, this is the space where we want to operate.
Got it.
The good part is, now there is a very strong collaboration in India between banks and fintechs. Banks are, whenever I talk to any bankers, right, they are more than happy to join hands with us and build books even in this segment. So there's a tech piece which we have built, which they do not want to suddenly invest in, right? And what they say is, okay, if you have already built the tech, if you have already built the ecosystem, we will partner with you, we will lend through you. So, end of the day, the advantage is the tech that we have built, the ecosystem that we have created, on which even banks can lend. And that exactly is what QuID has done.
So, at the end, government is supreme, right? Our RBI is supreme. This might be a question that might seem it's too far-fetched, but I will ask. Will there be a day, if a day comes wherein the government wants to take control of all the NBFCs or all the fintech companies, what is the protection that you have as fintech companies to prevent this from happening?
See, you are referring to regulatory risk.
Exactly.
There's another risk which banks, fintechs, and NBFCs take.
Right.
To your question whether government can do it, in the past they have done it. In 1972, Indira Gandhi nationalized all the banks.
Okay.
right? And we had serious repercussions.
Mm-hmm.
Now the concept is, the best practice would be, if you look at any developed nations, government wouldn't get into the any business, because it's not efficient. When government runs a business, mostly it is not efficient, right? So most of these governments in any developed democratic countries, if you see, they do not get into the business of business. What they do is they create ecosystem around it, and they allow businesses to cherish. That has been the concept of the Indian government last 20-30 years, if you see. It's very predictable. They would not want to get into the business of banking, because that becomes inefficient.
Okay.
They wouldn't want to get into controlling the NBFCs, right? They wouldn't want to do that. What they would love to do, my understanding, is that create a very good ecosystem where the banking and lending industry operates and cherishes along with helping the economy grow.
Okay.
That is the vision of the government, is what I believe.
Right. So, in the last decade or so, there has been a boom in fintech in India, just like I was telling you. How do you manage competition? Because there will be other players who will enter the space and probably give like a lesser rate of interest. How do you ensure that you stay relevant in that competition?
Fantastic question. See, in lending, there's no product, right? It's cash. People want money, we lend. Whether, let's say you are a borrower, right? For you, whether the money comes from QuID or a bank, doesn't matter. What matters to you is the rate of interest and how quickly it comes, and what is the convenience, right? Now, that said, the market, if you look at the total addressable market that you look at, is huge. Even 10 more fintechs like QuID, the market can accommodate.
Okay.
What matters is who is getting the execution done right. And the player who does the execution right, the player who calculates things carefully in terms of risk, the startup or fintech which does the risk planning carefully and plays a long-term game, he will survive and grow. We have seen in this industry, lending, right? Many NBFCs, many banks, they came, for example, HDFC for that matter. They are doing extremely well, right? You also contradicting cases where some of the banks and NBFCs came into the space, shut their business in 3-4 years. So it's not the interest rate alone that decides whether you can compete with somebody or not. In fact, I would say there's no competition as such. The reason is the market is so big. Each of these players, they operate in their own zone, right? And you have customers, right? Lending is an evergreen product. People would want working capital.
Okay.
It's the execution that you have to focus on. It's the technology that you build, and how do you impact the end borrowers. That matters.
Right. So every fintech product that comes out, I know there is a potential customer out there, but I've always had this challenge. So tomorrow, if I start a company like QuID, how do I reach it out to the customers? Obviously, marketing, sales people, going on ground and telling people that there is a brand like this. But how difficult does it get? Because a startup already has a lot of challenges, and the most important challenging is to find a customer. So how do you manage that, and how did you start off with that?
That has been a great learning for us. Right? We thought we have to build a brand, right, which will resonate with the customer, connect with him, and we thought the customer has to have the brand recall. That was the focus, and we did everything to get that enabled. But actually, to our surprise, what we later realized was that it was a wrong strategy that we implemented. Right? Later, we realized, why should customers know about it?
Okay.
Not necessarily in our model, right? So we thought, okay, the moment we mentioned the brand QuID initially, right, customers were confused, and there was this lack of trust issues because he's now thinking, what is QuID? He doesn't know.
Correct.
Then we decided that we will not do that. So in the model that we operate, we always do the white labeling of the manufacturer or the supplier.
Okay.
Right? There is a supplier.
Correct.
We go along with him. He has built a brand, right?
Right.
For example, HUL or any brand for that matter. They have already built a brand. Now, if I go say there is a HUL, there is a distributor called Recler, there is multiple names. The customer gets confused. Who is what?
Okay.
What we realized, and then we took a U-turn and said, no, let's not position our brand directly to the customer, right? We white label. We say, okay, you're buying HUL products, you have an option for pay later.
Nice.
That works. So Not necessarily you have to try to build a brand which the customers will have the high recall rate.
Okay.
That problem statement itself you may have to rethink. Because in this space, you go along the anchor, he's your sponsor, you go with him. And whoever wants credit, they will take it because there is an established rapport and trust between the supplier and the buyer already.
Okay.
So why would I want to bring a new name which will confuse the customers?
Correct.
So we learned this very quickly, and then we stopped, heavily doing our branding, and then we said, okay, let's white label and go through them.
Right.
And that to our luck worked really well. So we do not do any marketing as such.
We want you to be more lucky, sir, because I've always had this one thing that there are entrepreneurs from all over India, but then there is a dearth of entrepreneurs who are from the soil of Karnataka, which I see. I might be wrong, but to see the bigger picture, I always wanted Kannadigas to be there out there, and I'm very happy the way you're performing. But now I have another question, right? Traditionally, what has been the scene? All these buyers have been dealing with cash. And now FinTech and EdTech is because online transactions have become so rampant. But still there is a majority of section that will deal with cash.
Correct.
Are you going out of your way to try to get them on the online platform? Because then you will have a lot of perks with filing your taxes, with GSTs, with rebates and all that.
Right.
So it's good also trying to touch that market because it is a big market, in fact.
Right. So the way it works, Akshay, is as I said, see, for example, FMCG industry. FMCG industry, as you rightly said, even today works on cash to some extent. A good chunk of the transaction is cash.
Cash.
Then we started analyzing why is this. Now I tell you a story of a retailer. Let's say I am a retailer. I open my shop. I run my business, a simple kirana shop. Now I buy products from 10 different distributors. Correct? There's a HUL distributor, there's a PNG distributor. All big brands supply to me through their distributors. But I sell this to the end users.
Okay.
Now when I do this, when I'm buying goods from 10 distributors, all these 10 distributors, even today, they give me the invoice paper-based. Right? So if you visit any retail store in India today and just check with them, you will have a bunch of invoices sitting on the table.
Okay.
Right? And he gets confused which invoice when he has to make the payment.
Right.
Correct? There's no schedule, it's not organized. Right? Now how does the payment happen? The distributor's sales executive comes, he says, sir, today is your payment day, please make this payment today. And he suddenly searches for the invoice, he gives it to him, and then he says, Acha, I have to make 25,000 rupees. Right? Now imagine 10 distributors following up the retailer for payments, different dates, different ticket size. That creates a lot of confusion.
Correct.
What we did is we thought, let's solve this problem. Right? When I work with a distributor, and when I streamline the tech, right, I get all his invoices on my platform. And I tell the retailer, you just download the QuiD app. All your invoices are in one place, digital copy. You make the payment there, it gets recorded. You can download the statement of accounts for your GST, tax, audit purpose. Right? Everything is in one place. Plus, when you make payment using QuiD app, you have reward points. All these days, nobody gave you the reward points because there was no track. Everything was cash and paper based. Third option is when you build a ledger with us, chances of you getting higher credit limits are very high. So a single app, QuiD app, can solve all these problems.
Okay.
That is why you see a lot of retailers are migrating and downloading our app because for them they do not actually like this paper-based invoice.
Okay.
Now that is the basic core philosophy on which we have built a lending product.
Okay. So the startup culture is very rampant. Everyone wants to start something. They don't want to work under someone. That is the general perception, including me, to be very honest. But then getting funding for a product is very difficult. So how did you manage that? Did you bootstrap or did you get people to fund your company?
Initially it was bootstrapped.
Okay.
But what I have learned from my experience is you build a good product. You build a product which can solve people's problem, customers' problem. Pick up a very core problem, right? The problem which the customer wants to get rid of.
Okay.
You pick up that problem and you build a very good simple solution. A tech-based solution. If you're a startup, you'll have to build a tech-based solution because tech can scale. Otherwise, you won't be able to scale the solution.
Correct.
Now the magic happens. Right? Investment, I do not think today is a bigger challenge because Indian startup ecosystem has opened up. There are investors who want to invest. We want to take risk and invest. The entire investment community, right, from the angel investors to venture capital firms, they are ready to take risk and invest.
Okay.
They have supported this, startup journey in India like anything. A fantastic support. But does that mean everybody will get funded? No. You will have to build a product which addresses a pain point and which is scalable. So if you crack this, right, and I'm sure there are a lot of such pain points which needs to be addressed. And if we pick up one of those problem statements and try to solve it, then funding comes automatically, is what I believe.
Right. So you've been a big part of Acharya for a quite large amount of time. And a lot of our students also would want to start something. Let's say FinTech, because that is what we can relate and talk about. How can a student zero down on a problem and build a product around it? Because my elementary issue is wherever I try to find a problem, there is someone already solving it.
Right.
How do I find an issue and try to build a product on it? Because if I'm not able to find the source of a problem, I will not be able to build it. So how do I do that?
See, I look at it differently. If you see a problem, if you also see others have already done it,
Okay.
right, it's a validation that the problem is stronger and you have to chase it to solve it.
Okay.
Right? Today, for me, if somebody comes to me and says there is no competition, that's a red flag for me. It means somebody has tried it and did not succeed,
Right.
and that's why nobody has solved it.
Fair enough.
Right?
Right.
So competition is a validation that something can be done, something can be built. That's your, that's how you think. If there's no competition, then there's it's a red flag. It's risky, right? That means somebody tried something. A lot of people tried and nothing worked there. But I wouldn't go into that space.
Okay.
I would personally see whether there are at least 2-3 players who are trying to solve that problem. Point one. Point two, if yes, how big they have grown. If they have grown very big, it means the market size is very big for your solution. And you will also grow if you execute things carefully.
Okay.
You look at competition and from the point of view of validation for the problem. Not as they say startups in India, for example, not all startups need to be need to have a extremely innovative product every time. It's simply not possible, right? Your point is very good because let's say OpenAI. You cannot invent OpenAI every month in every country, right? It's not possible. It took 8-10 years of research and then they have come here. You need not always build something like that. It depends, right? It depends on who you are, what is your background. But personally, I would take up a popular problem, right?
Okay.
And see if there are competitors. 2-3 competitors, and I will love it if they are doing really well. And then I would get into it.
But as I see it, right, if you see in this point of view, are we restricting our whole startup ecosystem? Because recently, I don't know if it's Piyush Goyal who brought up this. A lot of the startups are only into quick delivery, quick commerce, quick fashion. Are we restricting our mindset to only chasing something that has been done and successful? Are we getting scared of experimenting and building something bigger like a China or probably a Germany or an America? Is that what is happening in the Indian ecosystem right now?
Good point. See, there is a different angle to this. Right? Let me take you back to the history of how Facebook became Facebook or Amazon became Amazon.
Right.
So Amazon, as we all know, was selling books, selling groceries on that.
Right.
Today, they control the cloud system in India. So there is a journey.
Correct.
So you go from that point to that point. Right? And we are in that sweet spot now. See, the idea is you first need to build a scalable business.
Okay.
You build a scalable business which generates huge amount of cash. Right? And you then use this cash to invest in research-based product, which will innovate and do something which was not done before.
Correct.
Take, for example, any company, right? OpenAI, Facebook, Microsoft. They all came from a background where they solved a core, basic, popular problem. Right? And then they have come here.
But that was
Facebook was what? Facebook was you just chat with the social networking app.
Correct.
But today Facebook, now called as Meta, is altogether at a different level. right?
Correct.
What is the reason? The reason is they have generated enough cash. See, for you to build a company which is very innovative in terms of technology, you need to invest heavily. And where does this money come from? A company should invest. So Amazon, for that matter, I said they were selling groceries.
Correct.
But today they are into space. They are into managing the cloud. They are number one in all these areas. But their history is they sold groceries, they sold goods.
Right.
So you generate cash first, become so big, make your balance sheet so big, then you invest in all these verticals,
Right.
then that becomes your story.
So my point of view might differ because when an Amazon started, there was no dot-com burst that had happened.
Right.
Or probably when a Meta started, the dot-com burst was just 3-4 years or maybe 5-6 years. So now starting an ecosystem might be very challenging, but I will agree to what you're saying because I understand where the point you're coming from because we have to save ourselves first.
Right.
And then when you're safe, you can probably take risks and do all this. Initially, jumping into risk without having a gauge of what you're getting at would not take you anywhere. Now, coming back to this, sir, you're a co-founder, right? What are those things you should always train yourself or groom yourself to be a founder of a company? Because if you're a founder, there are some things, organizational principles, and how the company operates. So, what are those characteristics that make you a startup founder?
The startup, a founder's job is mostly like an aggregator. Founder himself is an aggregator, in my opinion. Right? He aggregates everything. He aggregates team. He aggregates customers. He does a lot of things. He himself is an aggregator. So our role and responsibility first would be you play two roles every day. Right? One is you work like an operator. Right? You come to office. There are routine things. Right? There are a lot of things that you have to manage. You do that, right? Morning till evening, you do that. But there's the other side to the founder.
Okay.
He has to be thinking, in terms of his product market fit, the strategy that he has to adopt, right? The competition that he has to track. Right? There are a lot of other things that he has to. So when you run like an operator, doing a lot of routine jobs in the organization, in the startup, and then you have another role to play, which is managing everything. You set the vision to the team. You build a product which the market demands. You pick up core problems and then crack it. Right? So these are two things that you have to do every day.
Okay.
Right? You miss the one, you will not be able to scale. So both together you will have to parallelly learn. And for that you need to have a lot of patience. Right? You need to sit with your team. You need to understand their pain points. What is that the team is going through. Right? You have to interact with them. And then build the team first. So when you have the confidence of your team, you have really good people on the floor. A lot of things will get solved automatically.
Okay. So there are a lot of things that I want to ask, but I think we have started on a very good note where we've tried to understand elementarily what happens in fintech. Is there anything that you want to add or tell our students who would want to get into this space? Should they do it? Should they work with a startup and learn how it is going on? Should they just jump all in? What should they do?
It depends, right? Each one of us have a different wavelength from frequency. I would not want to give a formula and say, you have to do this.
Okay.
It depends. See, if I were to start again, I would definitely work with a startup, try and understand what is happening there. That is one way. The second thing is, as I said, keep looking for problems. Keep looking for problem statements. In and around the place you operate, you be open. Like, what is the problem? How it can be solved? Is the solution scalable? Because the problem, the size of the market is so big for the problem. And if I solve, will it impact? Right? That is, students need to keep thinking in this direction. And there is a lot of things today just taught inside the classroom as well.
Right.
Your job is to connect the dots. Right? What is that I'm learning in the classroom? What is that I can pick up and then apply it in the real world?
Correct.
I see a problem. Is there a theory behind it? Right? A lot of these financial models, the Excel calculations that we do, a lot of things are actually taught to us in classroom. Today we implement it here. So that has to be the mindset is what I believe. These are my learnings. That is how I look at things. And then try solving these problems. Stay curious. That is what it is.
So I'll ask you something that I have always had and suddenly came. You don't look a day older than 35. I might be wrong. You might be just 33 now. But what I see is there are a lot of Gen Z kids who would just enter the startup ecosystem. And there's this one complaint that a lot of founders have. Gen Zs don't comply to the rules. They're always rebels. They don't like something, they leave it. If they don't come to work, they just write to a mail saying, I'm not sick, I'm not coming. It is not an issue. Do you think that is a problem that you have experienced anytime, or you're okay with this?
See, rather than me saying we are okay with that, I would say we have to learn to accept it.
So it means you've accepted it.
No, because the thing is, see, these kids are sharper than us. Right? They have better ideas than us.
Correct.
They do not work like us. And why force certain fashion and template on these kids who have very innovative, crazy ideas? On the floor, we have a lot of people, right? So it's about the mindset, right? We have a traditional mindset. We say ABC, this is how it should work. But they look at things very differently.
Correct.
And that has been a big advantage for us. You work with them. You see, the biggest thing is when we hire people, if we have to hire where they will come and tell us what is the solution. Because you have a company pays salary, but you come and tell us what needs to be done, what and how that's the solution.
Correct.
But if you hire people with the mindset that I bring somebody, I will tell them what to do and also pay them, that doesn't make sense to you, right? Because you are giving him work and you are also telling how to do it, and you are paying for it.
Correct.
Right? What has to be our mindset is, look, this is the task, this is the problem statement. I hire somebody who is very capable, has that mindset. Then I ask him how this can be solved.
Okay.
Because the company is paying him to bring out the solutions. The idea shouldn't be I tell him what to do.
Correct.
When you change this, right, then you will see huge advantage for the company. That I've experienced myself. You ask people how this needs to be done.
Okay.
And they'll tell you how this can be cracked. And that way the Gen Z is extremely smart.
True.
They have a better solution than what we have is what I think.
So that is what I believe as a late millennial, because I'm also an engineering graduate. And how we operated was, we just thought we'll learn on the job. But now Gen Z are so smart, they've realized that if you're not good at what we're doing, let alone learning on the job, a company will not even give us a job. Do you think, Gen Zs are so competent these days that it is a boon for startup founders to hire these people?
Absolutely. They're extremely smart. Right? When I interview people, I realize it. And they are 10 times ahead of you. They know a lot of things. Right? And see, the biggest thing that I see is, in my days or previously, people used to be more focused on academics. Right? Now, when I interview candidates, I see they are good in academics, they are good in sports, they would have picked up one of the musical instruments and they would have learned it to a decent level. Right? They are multi-talented. They can do all these things. But previously, this was not the case. You focus on academics and that's it.
Sorry, sir, I would like to argue with this because I have done a lot of things in my life. I call myself an all-rounder, but yes, I agree with what you're saying.
No, but see, when you build a startup, you need such people. You do not want an employee who was only focused on academics.
Correct.
And doesn't have any other thing. Today, for example, the universities and colleges, they do not want kids to focus only on education. Right? That's how you build. That's how you look at people. So the moment you think like that, then you will see fresh ideas coming in.
Right. So my final question, sir, there is a lot of insights I got today. I'm sure we'll have bigger discussions. My last question is, as a B2B brand that has established an ecosystem and we're thriving and doing really well, there is always this temptation of getting into the B2C space because of the size of the market, which is probably 20, 30 times, I don't know, or even bigger. So is there a temptation or is there an idea of you getting into that B2C space?
B2C, no, as of now, we do not want to do that.
Okay.
Because the market in which we operate, B2B supply chain or anchor-led supply chain financing, is humongous.
Right.
We have a lot of other products which can be done within this space.
Okay.
So as a company, the kind of thing that we have built so far, we would want to explore all these other options first before maybe getting into B2C or any other vertical. As of now, we do not have such plans.
Okay.
But yeah, B2B is a big space and there are other products which we may want to in the
Yeah, yeah, because whenever I listen to these terms of B2B, B2C, D2C, I always thought that B2B is a very elite space to be in.
Right.
Because you know that for a reason someone is running a business and they will understand the problems that you are going through. And there is a lesser inherent risk that you pose and the lesser human resource that you will have to hire. But all being said and done, Vikram sir, thank you so much for being a part of the Acharya podcast. I hope you had a blast just like how I had a great time talking to you.
Same here. Loved talking to you. It was a
Thank you.
beautiful conversation, and always thank you for what Acharya has done to me.
Okay, sir, a few words about Acharya because you worked there. How much do you miss Acharya?
Acharya is my home, as I said.
Okay.
Right? I had a fantastic time working with the leadership at Acharya. Shalini ma'am, Krishna, all these entire set of people, right? Bhushan sir, Vishesh, everybody.
Right.
I miss them, right? We were a solid team. The team was focused on education
Okay.
and various other businesses. But today I miss that setup, but I am very close to them. Right? I interact with them.
Right.
And whatever I have done so far, I would definitely want to take this opportunity to thank Acharya for it.
Yes. With this note, I would like to promise Acharya students that QuID will hire 10 more employees from Acharya.
No, in fact, just started.
Okay.
In fact, last week we have got resumes from Acharya students. I
Oh,
just
nice.
reached out to Krishna's office
Okay.
and I said, we are hiring for chefs.
Okay.
So we have got around 10 profiles already.
Very
So
nice.
the screening process is happening.
Right.
I would love to do that.
So any influence you need, call me or text me on Allrounder Akshay on Instagram. Thank you so much, sir. It was a
Thank you, Akshay.
blast
Pleasure
talking to you.
talking to you.
Thank you so much.
Thank you.
Yeah.